What's going on, everybody? It's Jeff here. Welcome back to the channel. It's time to take a minute and talk about a specific strategy that I play a few times a month that is very, very profitable for me. My win percentage is very good. The only downside to this is it's not available to play every single day. I got a lot of people asking questions inside the group, so I wanted to not only make a video for them, but also everybody to try to help add a new strategy to your techniques. Okay, so before we get into it, a couple things I want to mention. There is really no right or wrong strategy. I always see a lot of individuals looking to jump from strategy to strategy, and what might work for multiple traders who are profitable might not work for you. It's just something that doesn't adapt well to your emotions. Maybe you don't see the moves, okay, or like I said, it just doesn't fit well for you, and that's okay. So the goal of this video is to tell you a couple key things I look at for this very specific popular strategy and why over the past 8 months, it has been one of my most profitable. And the first thing I want to tell you is it's all about patience. So I'm going to get into specifically what to look for. And like I said, it doesn't play out every single day, but specifically what to look for. And hopefully this is something that you can go and back test and also maybe add to your skills. So let's get right into it. First of all, I played this today. It is known as the opening range breakout. Very popular strategy. In very simple terms, the opening range is the high and low for a given period of time. We're looking at, okay, pre-market for this, and it happens generally within the first 30 or 60 minutes of trading. It is also one of the most important chart patterns to make money in the stock market. Like I said, one of the only downfalls is this does not play out every single day. So here is the SPY currently. This is on Friday. Like I said, the market's kind of slow right now, so I wanted to make this other video. And I decided to play the opening range breakout. So I have my range right now of 380, and I also have up here at 382. Now the pre-market high, not including, okay, what happened overnight, but the pre-market high was 381.76. I just know 38 or 382 was a very strong resistance previously on the daily. And I just wanted to get a little extra confirmation. Okay. So we're going to go over the few different steps that I look at when playing an opening range breakout. I try to look for these probably about 45 minutes before the open. All right. And so the first thing that I will look for is you want to have a gap to the upside or a gap to the downside. Okay. So yesterday we closed on the SPY at about somewhere around that 378 range. And as you can see, we are currently gapping up. We opened at about that just over 381. Okay. But we were gapping above that 380. So we have a nice little move. Now this is on an indice. Okay. So like I said, it's a little bit different if you're playing like individual stocks like Tesla. You're going to want to see more than, a $2 or $3 gap up. But on an indice, that's the first thing I look for is a gap to either direction, upside or downside. That one is a must. The second thing that's a must, and this really goes towards the risk reward, okay? And this is why you cannot play this, or I do not play this every single day, is I look for a very tight consolidation. And what I mean by that is I want a close range. Okay, if I look at a different chart and I see SPY might be gapping up, 3 points or maybe 4 points. However, it's very choppy, meaning my range, okay, is not very tight. Like this is a 2-point range, but the range is like a 4-point range, and I'm still going to open somewhere in the middle. It's very difficult to be able to play that strategy. And the reason being is because a lot of times you'll open at the middle and you'll reject off of it. Okay. So I like to look for a very, very tight consolidation. Those are the two things that are a must. And that's probably why, like I said, you cannot play this strategy every single day. Lastly, before we get into what I specifically look at when it comes to time frames and charting and stuff, is you want to see that massive volume start to come in. So I like to play this on the 5-minute candle. And really the reason being for that is 1, preference, and 2, to try to avoid fake outs. So if you're playing on the 1-minute candle, the chances are you can be faked out just a little bit more. If you're playing on the 2 or 3-minute candle, that's okay. It's just whatever your preference is. I like playing on the 5-minute candle. First thing I would look for is a breakthrough. Sometimes you get that immediate breakthrough and it just goes. And there are times where I might be having this on my chart. I might, call it out to the group and say specifically what I'm looking for. Not only is it one of the 7 or 8 stocks, that I list every single day, for what I'm looking for, and I talk about inside the general stock chat of specifically what I'm looking for, but this is one that is really, really high on my list. And if it just blasts right through it, I might be like, oh, you know what? I'm not going to chase it. And guess what? That's okay. I might say that at 384, I'm not going to chase it. It still goes to 387. That's okay. I'm following my rules and I'm managing my risk reward. So I will look for that breakthrough, and I'll also look for the retest to hold. And that those two right there combined is like, all right, we are off to the races. And once I saw this second candle, we saw that wick down to previous. Once you break through that resistance, you want that previous resistance to now become support. Now I'm looking for that level to hold. Once that level hold, that third candle, saw some green, saw it pushing. That's when I entered, came up here. I scaled a little bit out. I'm always scaling out of my contracts, and I continue to move that to the upside. Eventually, I did get cut out on my runners as we broke that 386. Seeing this massive candle end on that 386, I really thought that we were going to, kind of dip back down. Especially because, like I said, we did get some massive move, although housing news was good. But anyways, that's what I chose to do with my position. It's called the opening range breakout. Couple key things I will mention to you just really quickly. I play this on the 5-minute. You want to have a good size, okay, gap to the upside or gap to the downside, and you also want to have a very, very tight range. Now, I use Thinkorswim. I love Thinkorswim for a million reasons, and also because I'm very, very comfortable with it. I trade off of it, but I will also use TradingView, okay? And this is just a free version, guys, but I will also use TradingView for my charting, all right? And as you can see right here, I have these clouds. These are the Ripster EMA clouds. If you're unfamiliar, go to Twitter, look up Ripster47. He's got a bunch of followers. He has this strategy. You can actually download it and implement it inside either Thinkorswim or TradingView. But the one thing I really like about TradingView is the charts are very clear, cut and dry. And as you can see, this opens up at 7 a.m. and it closes at 8 p.m. versus when you go back to Thinkorswim, you've got all that crappy chop, that low volume, just really meaningless action, okay? That's all what's happening of shifting funds, okay, overnight. And if you want to look at, something, look at the futures, but don't look at it. And TradingView cuts that out. I do want to see some pre-market, obviously. So that's why I like TradingView when it cuts, when it comes to charting. And plus you could see very, very clearly, all right, gap up, tight range, all right? Now, if you scroll back over to SPY, and I'll use this as a perfect example, this is a beautiful example of what happened just the other day of where you would not play an opening range breakout. You have the gap up, but this range from 377 all the way down to 375, just based on the gap up, even though it is only a 2-point range, which is exactly what we had here, it's just not very tight. It's a little bit sloppy. And as you can see, a breakout didn't happen. You just kind of got that chop. Also, like I said, you did have it from, this was when Powell was testifying as well. But let's take a look at one other one that I played the other day. I normally don't play these, twice in 1 week, but this one was Tesla, which was absolutely beautiful. And you can see it right here, which is on the 21st. Same thing. We got that beautiful gap up, that nice, solid range. It started to break out a little bit, pre-market, but that was okay. I still felt very comfortable with my entry. All right. And once it tapped down, held that support after, the market opened, it was a beautiful entry. And this one rode all the way up. This one was on the 21st. We took that, where was this? 21st. Yeah, the 730s. The 730s almost got in the money. I don't think we got that all the way to in the money, but come check that out. That's exactly what I love playing with this. Is you can look at other videos that probably explain a little bit more detail. Maybe you'll be able to relate to them a little bit better, but it's called the opening range breakout. Check it out. Just remember a few key things that I mentioned. You really want to have a decent sized gap up, and you also want to have a tight channeling. When it comes to the dollar amount, all right, because I had showed you one from SPY from the day before, I wouldn't look at it as like 2 points or 3 points or 4 points. I would just look for that tight, solid range. Okay, as you can see here, this is nice and tight. You're not getting those wild swings up and down and choppy. Those are the things I really look for. Also, if you're looking for that extra confirmation so you can get you don't get hurt on false breakouts, look for the retest to hold right here. So guys, I hope that strategy helps you. That's it for this video. I'll see you in the next one.